Ladies and gentlemen, for the first time in Wolves of Crypto weekly polling history, right? We started a weekly poll we do asking whether they think the bottom is in about March last year. For the first time ever, we've seen the majority of people say they think the bottom is in. So this represents a dramatic shift in market sentiment. Obviously, my specific channel and the polls I do on my specific channel are quite biased because they rely on my opinions to a certain extent. A lot of people who watch me agree with me and hence they're going to say what I say. And obviously, I think the bottom is in. So a lot of people are going to think the bottom is in based on that. But with that said, I was saying the bottom was in at 16K, and at that point we only had about 29% of people say they agree. Now we have 55%. So that's pretty major. But this comes at a time where Bitcoin's bumping its head on resistance, of course, in the daily chart. We'll get into all that in a second. Short term, not looking particularly good. I mean, the actual hourly chart itself has a bullish structure, but the daily chart is looking pretty rough. We're seeing bearish divergence. We're seeing long wicks to the upside with no real candle body progress. But I want to look at one more thing as well. And this is quite important. It's the major kind of macro, almost over a year long, close to 2 year long, descending wedge formation on the Bitcoin logarithmic chart. There's a massive descending wedge that's stemming all the way back from like 2020 or early 2021 that we're currently hitting our head on the top of the resistance for that. If we break to the upside, we're in for a huge move. So let's get into that in a second. Without further ado, check out the pinned comment, check out the description. We've got the BitGet Exchange down there. We've got the Crypto Academy courses. We've got the VIP group, which you can check out using the link down there and check out the results for Q4 and find more information down there in the description, the pinned comment. All right, guys, let's get into the video. Starting out with the most major thing of them all, we have the descending wedge formation here on the Bitcoin macro chart on logarithmic scale. It doesn't really work on linear, but it does work on logarithmic, which is fine because it's spanning over a long kind of price history, and it's also spanning on a long scale of price, right? It's coming all the way down from 15K all the way up to 69K over the course of, 2 years exactly, actually over 2 years now. So pretty big macro structure there, and as you can see, we've kind of come up and we've actually hit the top here, rejecting off the top. And we'll get into that rejection in a second because it does reflect on the Bitcoin short-term charts, also on Ethereum and also Metoda cryptocurrency market cap. So now more than ever, we are at kind of supreme risk here for a rejection on Bitcoin. It's not the time to be entering new positions, not the time to be entering longs. I don't think so, at least. And if you haven't already done so, that is, and if you are waiting for an entry, I would recommend waiting for a breakout of this descending wedge formation here. I didn't really see this rejection until a couple days ago, so we did miss out on that, unfortunately, but I do see it now, and it kind of links up quite well with this 8-year uptrending support line. We can see in yellow here, this is a support line that's stemming all the way back from 2014, and it gives us a nice little breakout deadline for the wedge itself. Obviously, this wedge is a valid structure. We have 3 tests for downside, 3 tests for the upside, very valid structure, nothing but valid, I should say. And ultimately, you could even draw it a little bit more conservatively, and you could draw it like this, and you could argue that Bitcoin's actually seen a breakout on this candle open right here. But for the sake of conservatism, for the sake of remaining, pessimistic, because I think that's what you need to be in the market. You need to be pessimistic. You need to be constantly looking for the worst case scenario. For the sake of that, we're going to draw it like this. We're going to act like that was a rejection, and I don't necessarily consider a candle open as a breakout, right? I don't think it constitutes a breakout. We need to see an actual candle close over the wedge itself for the breakout. But ultimately, I was saying before, this 8-year uptrending support line in yellow, in conjunction with this downtrending top line of the wedge, does give us a deadline, okay? We can go ahead and draw in that deadline for when the decision has to be made. That deadline's looking at coming in at about mid to late April, right? So essentially, we can only bounce between these two lines for so long before we have to break down from one of them and go downwards to a new support level, or break upwards and go upwards to test a new resistance level. Now, here's the interesting thing. If we go downwards, we break below this, there's no support until 13.8K, which is lower than we went before. So if we break down from this wedge formation, we break down from this micro consolidation structure formation, I should say, we're breaking the 4-year cycle theory, and Bitcoin will enter into a death spiral in which it won't bottom out until traditional markets do, which could be as late as 2024. But if we break to the upside, where are we going? Well, if we break to the upside, the nearest actual macro resistance is up here at 28.6K, this red line. If we break this wedge to the upside, we should have a clean shot to 28.6K. We should retest that resistance. And if we break that to the upside, that is 100% full confirmation that the bear market is over and we are back in bullish territory. Now, this April deadline is actually quite interesting because we've looked at this before. the distance between horizontal support breakdowns, such as 28.6k and the equivalent for previous bear markets, and horizontal resistance breakup is generally, there's not actually much of a trend here. But for example, in 2015, it was 420 days. So if we were to replicate that, right, and again, this is the distance between breaking below 28.6k and breaking above it, which is the region we will test if we break the wedge to the upside, okay? We would be looking at a break to the upside of 28.6k around July 2023, which makes the April deadline make a lot of sense, because if we break up before April, we've got until about July to break 28.6k, which gives us plenty of time to get above that line, and it does seem to link up just in terms of logically speaking. So I think that one of the most major things people need to be watching now has shifted from the 4-year cycle to the 8-year uptrending support line, and more importantly, this descending wedge formation on a macro scale, because the 4-year cycle, in my opinion, is pretty much confirmed at this point, unless we see a breakdown from this wedge, and so that makes the wedge a bigger priority. Okay, and by the wedge, I mean the top line of the wedge and the 8-year support line. So this is what everyone needs to be watching right now, for sure. This is definitely the most important thing you need to watch on Bitcoin. I want to briefly interrupt this video to talk about the BitGet exchange. The BitGet exchange has 5 times lower fees than Binance on futures. It has 0 spot fees for spot trading, meaning you can trade spot for entirely free on every single coin. It has a rewards center. It has a protection fund. It has events regularly run. For example, the FIFA World Cup event it ran recently was in partnership with Messi, the famous football player. There are many, many reasons to sign up using this exchange here, but if you sign up using my exclusive referral link, which you can find a link to in the pinned comment or description, you will get a further 15% decrease on futures fees, and you'll get access to an exclusive reward center in which you can gain access to 4,000 USD in rewards via completing various tasks of various difficulties. Signing up to this exchange using my referral link is by far the best way you can support the channel, and it's the best way you can support yourself as a trader, gaining access to the cheapest exchange on the cryptocurrency market. Now, for my viewers from the United States of America, when you're signing up to the exchange, click on Other as Country of Residence, as you can see I'm doing on the screen now, and you will be able to sign up and use the exchange. Normally, as a non-KYC customer, you'll be treated exactly the same as everyone else in the exchange. So please sign up using my referral link. Thanks for watching the advertisement. Let's get back into the video. Now, as for the rejection from the wedge itself, we can see we rejected here from the wedge at the high point of the recent rally, and it does make sense. Okay, we're seeing bearish divergence on this daily chart here, as you can see in the RSI, lower highs in the RSI, high highs in the price. We're seeing volume kind of decrease as we head further and further upwards. Volume here is rounding out, which represents a tapering off of the strength of this move. And of course, as we get towards these high points and we get towards these upper resistance levels, we're seeing specifically at this one at 22.7k, daily candles are very much struggling to close over that level. We're seeing high wicks to the upside, but ultimately not closing any higher, which represents the fact that the buyers are still there, but they're failing. The balance of power between the bears and the bulls is shifting towards bearish favor now, right? We're seeing the top of this move. That's generally a topping out structure. So I would expect Bitcoin to be having some sort of retracement here. And if it does not, well, then we're breaking the wedge. And in that case, we're powering upwards, right? So it's either we reject here or we power upwards even further, and we even just skyrocket straight to 28.6k. We'll have to see what happens. I don't think it's particularly likely that Bitcoin, goes up without any sort of retracement here. Because if you think about it, right, if we go straight upwards and we go towards 28.6k, that would be a move from what? All the way down here at 15.4k, all the way up to 28.6k. That would be a 84% move without any sizable correction. Like, come on. Like, we have to correct at some point, right? And that's kind of the argument I'm making here. I do think we'll see some sort of correction. For that correction to materialize into a large correction rather than a small pullback, we would have to break below 22k. 22k is the nearest support zone, so breaking below 22k would also be a break below all of these diagonal support lines we have in the short-term charts, and a break below the short-term descending channel formation, right? So again, breaking below 22k will lead to a breakdown further to that 19.5 to 19.8k level, for which case we can probably find a low there. So I do think a pullback is probably more likely at this point, but then again, with short-term charts, pullbacks have been more likely for like a couple weeks and they haven't happened. So we're just going to have to wait and see. But I do think a decision will be coming very shortly because the MACD is coming very close to a momentum reversal point. Yes, that is a bullish crossing coming, but generally speaking, you can see those crosses diverted at the last second. It's more of a representation of the time frame in which there's going to be a move, and that move is going to be coming quite soon. So at the same time as all of this has happened, we're also seeing Ethereum at strong resistance, and we're seeing the total cryptocurrency market cap at strong resistance as well, which kind of adds to the argument here that Bitcoin Bitcoin is at a resistance line stemming all the way back from November 2021. While it's exhausted itself quite heavily on the weekly chart and a daily chart, it does seem plausible that we see a small pullback here, and we do have time to see it. It's not like we're in a rush to move to the upside, as we said and as we established before. The breakout point doesn't even have to come until mid-April, so we do have plenty of time here. In fact, we have like 3 months, at the most. I think we'll see a breakout within 3 months, of course, but at the most 3 months, and it would still be healthy. So that's interesting as well. What we're looking at now for an invalidation point, because we have bought Bitcoin, of course, got an average price of Bitcoin around 19.5K over the course of 2 buys. What we're looking for an invalidation of our position is a breakdown from the yellow 8-year uptrending support line, which as of current would be a breakdown below 16.4K, but that is trending upwards. That would be our invalidation point. If we break below that, it's pretty much over for Bitcoin. It will go down further for sure. You can't really break an 8-year uptrending support line and not go down to new lows. It's not how it works. So this 8-year uptrending support line is very much Bitcoin's lifeline. And I mean that quite literally when I use the word line, right? It's a lifeline. It's quite literally the thing that's holding together the whole 4-year cycle theory. If we lose that, we're not looking good. So that's the kind of analysis today, guys. Big thing to watch in that descending wedge formation. That's kind of the overall topic and the thing we'll have our eyes on now, because we've had a lot of focus on the 4-year cycle theory, and now that we've seen that bottom is likely in, it's not confirmed yet until 28.6K, but we've seen the bottom is likely in, we have to shift our focus to something different, and this wedge is that topic of focus that we're shifting towards. So thank you for watching. Before we end the video, I'll take a quick look at the Crypto Academy. So the Crypto Academy is a course developed by myself and Megawell Crypto. You guys are probably familiar with it by now, but it's the Become a Trader 10-unit course, which takes you from the first, kind of fundamental concepts of cryptocurrency, the basics, all the way through to how to actually trade, how to manage risk in a trade, how to find trades through using indicators, market patterns, candlestick formations, basically teaching you how to become a professional trader, or at least a very proficient trader, in a 10-unit course that you can complete in around 40 hours from start to finish. So check that out via the website, and ultimately you can email us here at cryptoacademycourses@gmail.com, and we'll get back to you with a full video explaining the course and a pamphlet with full of the information. So thank you for watching. Hope you enjoyed the video, guys, and I'll catch you in the next one. Cheers.